Okay students, today let us look into the 8th problem, CFS 14 marks. 2014 question paper. Following are the summarized balance sheet of a company as on 31/3/12 and 31/3/13. Share capital, there is an increase in 5,000. It's called issue of share capital. It will come in finance activity, add. General reserve will come in operating activity. 1,000 rupee is GR transfer, add. PL account will come in operating activity. Last year 3,050, current year 3,060. So the net profit is 10 rupees. That is 3,060 minus 3,050. You get 10 rupees. Next, followed by long-term loan will come in finance activity. Last year we had 7,000, but we don't have in the current year, indicates that loan is repaid. So minus. Sundry creditor is a current liability. Operating activity, there is a decrease in current liability to the extent of 1,480. Operating activity minus. Provision for tax, we have an adjustment, we need to prepare an account. Land and building, there is an adjustment, we need to prepare an account. Machinery, there is an adjustment, we need to prepare an account. And debtor operating activity, there is a decrease in debtor to the extent of 1,580. So you should add. Stock operating activity, there is a decrease in stock 2,600. So you should add. Opening cash 50, closing cash 860. So this will come in CFS, and then we have a goodwill in the current year 500. So additional information, dividend of 2,300 was paid. So it should be added in operating activity, deducted in finance activity. Assets of another company were purchased, machinery 2,500 plus stock 2,000 plus goodwill 500. So 3 assets are purchased, total comes to 5,000 to 2,500 plus 2,000 plus 500. So 5,000 rupee asset is purchased, but payment is not made by cash, payment is made by share. So therefore what you should do, students, only stock 2,000 will come in finance activity, because machinery non-current, share non-current, stock current, share non-current, goodwill non-current, share non-current. So only stock to the extent of 2,000 will come in finance activity. Machinery was further purchased for cash 800. So it will come in machinery account and investing activity. Depreciation written off on machinery will come in machinery account and operating activity. Income tax provided during the year 3,300. It is not paid, it's provided. An amount kept aside to pay tax in the future. So this is called provision for tax 3,300. OA you should add, and it will come in provision for tax account. Loss on sale of machinery 500 was written off. So 500 is a loss, will come in machinery account, and OA you should add. And student, there is no adjustment related to land and building. So decrease in land and building we will treat as depreciation. No need to prepare land and building account. If you just prepare operating activity, if you add depreciation on land and building, it's enough. So no adjustment on land and building, so no land and building account. You are required to prepare cash flow statement as per indirect method AS3. Provision for tax account you need to prepare, it's a liability. So by balance brought down 3,000. The new provision created out of profit 3,300. Then debit side to balance carried down. So difference in figure 2,800 will be called IT paid. Finance activity you should minus. Machinery is an asset, so you write to balance brought down. Then machinery is purchased through issue of share, and another machinery is purchased for 800 given in the adjustment. Then in adjustment they are given depreciation on machinery 1,200. Then we have a loss on sale of machinery 500. That means it's called scrap. Then closing balance of machinery. Credit side total is more. So debit side difference in figure 300 is called further additional extra purchase of machine. So three purchases are made. One purchase is through issue of share, another purchase by cash, another purchase by cash. So two machines are purchased by cash. This is called cash flow from operating activity. Net profit 3060 minus 3050, you get 10 rupee. Current year profit minus last year profit. Add loss on sale of machinery, add depreciation on machinery, add taxation provision, add dividend paid, add decrease in debtor, add decrease in stock, add depreciation on land and building 1000, last year 20,000, current year 19,000 given in the balance sheet. No adjustment, so we treat that decrease 1000 as depreciation. Add GR transfer. So you get subtotal of 13,490 less decrease in creditor 1,480. So we get plus 12,010. It's called cash flow from operating activity. Next, cash flow from investing activity. We don't have any sale of land and building, no sale of machinery. We have only purchase of machinery, two machinery. Only you should take purchase of machinery by cash, not by share. So 800 given in adjustment, 300 which we found in the machinery account. So we get total purchase 1100. So you get minus 1100 because purchase is treated as an expense. So it's minus 1100 cash flow from investing activity. Next, cash flow from finance activity, issue of shares only for stock. Only stock amount you should take because stock is current, share is non-current. So 2000 less dividend paid, less long-term loan paid, less IT paid. You get cash flow from finance activity minus 10,100, which indicates it's a cash outflow. Next, cash flow statement. So we get cash flow from operating activity 12,010, cash flow from investing activity minus 1,100, cash flow from finance activity 10,100. So you get a differencing figure of 810. So add opening cash 50, you get a resulting answer of 860 as closing cash and bank. Thank you, students.